All right, today we're going to dive in and decode a new tool that's trying to be a compass in what can feel like the wild, chaotic world of startup investing.
You know that feeling, right? You're looking at thousands of startups raising money online and it just feels overwhelming. It's so hard to find the real signal in all that noise. But what if there was a way to get a quick pulse check on the companies that are actually gaining momentum?
So to really get why this is such a big deal, we've got to rewind to 2012. That's when the Jobs Act completely changed the game. It basically blew the doors wide open, letting everyday people, not just the super rich, get in on the ground floor of what could be the next big thing.
But here's the catch. That flood of opportunity also created a huge challenge. I mean, with over 7,500 different offerings out there, how is any one person supposed to sort through it all and find the real gems?
Well, it turns out the solution came from the very people who helped build this new market. And to really appreciate their tool, you have to understand just how credible these folks are.
So meet Crowdfund Capital Advisors, or CCA. These guys aren't just watching from the sidelines. They practically wrote the rulebook. They helped draft the Jobs Act itself, wrote the dummies guide on the topic, created a major market index, and built this massive data set of thousands of offerings. To put it simply, they're a powerhouse.
So with all that expertise and a mountain of data, they built a system designed to cut right through that confusion, and they call it the Pulse.
The official name is CapitalPulse Ratings, and you can pretty much think of it as a first-of-its-kind system that gives you a live, data-driven look at what's actually happening in the crowdfunding market, like right now. So what's the secret sauce here? This quote from Sherwood Nice at CCA really nails it. It's not just about one thing. It's about combining two totally different perspectives to get that full 360-degree view of a company. And this dual approach is really the engine behind the whole thing. On one side, you have traditional analysis, looking at the financials, the valuation, the stuff any venture capitalist would do. But then it combines that with something totally new and powerful, real-time investor sentiment. The algorithm isn't just tracking how much money is going in, but how fast it's flowing, and from how many different investors. It's a direct measurement of market buzz. So the system crunches all this data, and then it scores and ranks the companies, sorting them all into 5 clear tiers based on their momentum. And this isn't just a simple good or bad score. It's much more nuanced. At the very top, you have rapid raisers. These are the deals that are absolutely on fire at this moment. Then you've got steady climbers, showing consistent, solid growth. The lower tiers help you spot companies with maybe some hidden or unlocked potential, all the way down to emerging opportunities where the value might not be so obvious just from the raw numbers. And every single week, their report takes all this analysis and highlights the top 15 offerings. This gives subscribers a really focused list of the companies that are seeing the most significant action from investors. Now, this all sounds incredibly powerful, right? But, and this is a really, really important but, it's crucial to understand what this tool is not. The creators are extremely clear about this. CapitalPulse is an analytical tool. It's for information, not for investment advice. Let's be crystal clear here. The ratings are not a buy signal. They don't look at the founder's past successes or the strength of the CEO. You've got to think of this as just one powerful piece of the puzzle. It's an amazing starting point, for sure, but it is absolutely no substitute for doing your own homework. So if we zoom out for a second, beyond just individual investments, what does a tool like this signal about where the whole market is headed? Well, it means the crowdfunding world is growing up. It's maturing. It's moving out of that Wild West phase and becoming a much more sophisticated, data-driven space where investors are getting better and better tools to work with. And get this, the applications are only just getting started. This exact same comprehensive data set is now being used to train AI models to do predictive analysis and track sentiment. This is really where finance and technology are starting to collide in a big way. All of this leaves us with a pretty fascinating question to think about. As these tools get more powerful and our data gets smarter, will finding the next great investment become less of an art and more of a science? Will a great deal ever become, well, truly obvious?